So I mentioned that we've been able to bring into light the old vicious cycle of a non-professional trader. And everything contained right here is everything we could talk about psychology induced error, poor psychology, blah, 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 and every other thing you see on the internet. It comes down to one thing that we all can figure out together here. What opens the door or the room for all these kinds of error? It's what? Money, right? And as said,
Yes.
consider Forex trading not to have a reward of money at the end of every trade. It could not give a dichotomy of either you make a win or a loss. But because of people's expectation of money, they get attached to it. And it leads to what? Irrational behavior that are factored in by greed and impatience. So I said, if money wasn't involved in Forex trading, 99.9% of every trader would be an excellent trader. Because you know what? You don't have anything on the line. So ask yourself, why is it that you see the market differently when you are not in a trade position? Why do you see differently from when you are in a trade position? Do you understand now? When your money is not on the line, you see the market as just a bunch of red and green candlesticks, right?
Yeah,
But if
yes.
money is on the line, you see it differently as a threat to your life.
Yes.
So the reason being that is because something is on the line, which is what? Money. And money opens you up to every form of psychologically induced error you can ever think of. So now that we know that money is the problem, because you can't solve for a problem you're not aware of. So money is subconsciously the reason why many traders perform so many irrational error. And most losses 90% of trader makes are from a psychologically induced issue, not technical. And that's why when most traders see that technical is the issue, they go over to learn new strategies and they get tired and depressed because they know the strategy works, but there's something that is just not connecting. That is the psychology. And the reasons for the psychological disconnection is because something is on the line, which is money. And what does money do? It allows you to act irrationally, which is not the best way to act in Forex trading. So now that we know that money is the issue, it leads us to what? How can we contain this issue and we put a permanent solution to this issue? And that is where risk management comes in Forex trade. So when I say risk management now, you better understand that risk management is not a way to manage money, but it's a way to manage yourself, your emotion as a trader. Because the degree of your irrational behavior is actually heightened or decreased by how much emotional attachment you have with the amount of money you put on the line. So if the money you put on the line makes you to see the market, which used to be once red and green candlestick, to what is now a threat to your life, that means the more you heighten your risk, the more you see it as a bigger threat, correct?
Yes.
And the way human psyche operates, the bigger the threat you see, the bigger the escape you look for, the bigger the irrational behavior you see. Take, for example, if you have a lion show up at your doorstep today, right now on this meeting, what are you going to do? The first thing is you forget the fact that you're doing a meeting. You know why? Because it's just a natural response of the way the mind thinks. So when you put so much risk that you can bear on a trade, what happens? You forget all your trading rules. You forget all your trading strategies. You forget everything and you act based on impulse driven by irrationality. So when I tell you the next time that you apply risk management, I'm not telling you to manage money. I'm telling you to manage yourself. Do you get it?
Yeah.